Hello, Jim here. Selling options is a great way to make some easy income on a monthly basis. Last month was my best month since I started trading options. I'll share with you the trades. I'll also talk about how I did in each account towards the very end of the video. And then I'll share with you what I learned along the way, especially after having such a rough month in April. It was the contrast between the 2 months is pretty incredible. So stay tuned. I think it's going to be well worth your while. Okay, now before I jump into the key points of the video, I do want to do a quick market update. We keep hitting new highs. The market was up big time today. It's again proving that it's very unpredictable. We are getting some numbers that show that unemployment is going up. The labor market is struggling to a certain degree. Also, it looks like inflation is under control. But do I think the Fed's going to cut rates? Probably not in July, but I still believe they will cut rates later in the year, probably September, October timeframe. And I think it's warranted. I do believe we need a rate cut. The mortgage rates are still above 7%. And, car loans are, I think, 8, 9, 10%. A few cuts. I'd rather them start sooner and do maybe quarter point cuts versus waiting. And then, the economy is really struggling and then they do major cuts at one time. I'd rather see a couple quarter point cuts, slow and steady, versus something that's a little bit more extreme. I do think there's a disconnect. What's happening with the stock market doesn't really relate to Main Street America. I do believe there's a lot of small businesses that are struggling. So at least I believe a rate cut would be warranted sooner than later. And again, it's my 2 cents and it may only be worth 2 cents. So one thing I talk about in every video that I do is what's key is picking the right companies at the right price. If you're able to do that, you've won 70, 80% of the game, both in investing and trading options. So I will use fundamentals. There's some people that don't believe in fundamentals. I do believe in fundamentals. Picking the right companies, it's important to look at return on equity, return on investment, debt to equity. Also, are they growing? Are they growing both in revenue and then also in income? Are they potentially paying a dividend? If they are paying a dividend, is it a low payout ratio, meaning they have plenty of cash to pay that dividend and potentially grow it? I really like companies that are growing dividends over a long time period. Those dividends, if they're growing them nicely, can turn into a really nice income stream. So those are just a few of the things. I will look at Bollinger Bands. I'll also look at RSI. And then I'll also go out just on the general chart and go out 10, 20 years and just see overall, especially if it's a company that's been around that long, kind of where things stand. I do believe there are a lot of companies that are way overpriced, so I'm avoiding those. It seems like at moments there's always bargains or companies that are underpriced, oversold. And then there's also plenty that are overbought. Palantir is still way overbought, in my humble opinion. I know a lot of my members and a lot of people out there are invested in Palantir, but I think short term it's a voting game, long term it's a weighing game. So if you do own a lot of Palantir, you may want to take some profits. I'm not saying get rid of all your shares, but maybe take some profits off the top. Because when it does drop, you may look back and say, man, I wish I had sold some. But I do think they're a great company. I do think they'll continue to grow. And they're not alone. There's a lot of companies. NVIDIA is shot up. I think it's reaching new highs now. And even AMD. AMD now is approaching 150. I originally thought it'd be 125 by the end of the year. Then I changed it to 150. They could be... they might hit 175 with the momentum. The momentum's majorly changing for them. And I think it's warranted. They're potentially going to double their income over the next couple of years. And their PE currently, or their ratios, are fairly low compared to a lot of other companies with the same kind of potential. So again, right stock at the right price, and you've won 70, 80% of the game. Next is picking safe strategies. I stick to safe strategies. I do covered calls, cash secured puts, vertical put credit spreads, and iron condors. I typically do them with a low delta for puts, typically a 10 delta, for calls around a 20 delta. I will make small modifications. For me, it's like, being the captain of a cruise ship, make small modifications versus radical changes. I do have members who are a lot riskier than I am. I'm an income investor long term. I've been investing for many, many years, going all the way back to the 80s. So for me, it's kind of slow and steady wins the game. Now, like I said, I do have some members who are making better returns than I am. They're taking a little bit more risk or a lot more risk, depending on the person in the situation. And I don't shy away from that. I don't mind that happening in my memberships. I do warn others before copying those trades. Be sure you understand what you're getting into. Ask questions. There's a lot of really good dialogue in my Discord and my membership. So, and as always, if you're curious about my membership, take a look in the description. There'll be details about that. I have a fair number of people joining. It's still a smaller group compared to some of the other Discords out there. And I want it that way. I kind of want it to be fewer people, so it's not too many people making comments and kind of being all over the place. So just wanted to share that. The other key point, again, related to, being a captain of a cruise liner and slowly making changes, I do that through what I call my guardrails, and I provide them in my planning worksheets. I'll show them to you in the next part of this video. And I adjust those as I figure out something worked or didn't work. But I don't do radical changes. I don't suddenly invest in companies that don't make money. I don't touch companies that don't make money. Now, I may add them into my watch list, especially if it looks like they're going to be making money soon, but I don't typically trade any kind of company not making money. I get a lot of questions, both from subscribers and members, about what do I think of this company. The first thing I check is if they make money. And if they're not making money, I typically don't trade on them, but I will look at fundamentals. I'll look to see, are they potentially going to be making money soon? And I've had that in a lot of cases. That's how I traded SoFi or did not trade SoFi. I waited till they were profitable and then got involved when I felt like that they were worth the risk. And I have others that aren't making money that, again, probably within the next 6 months to a year, probably will be making money. So it's important to identify those guardrails, those like what deltas you want to work with, what expirations, what strikes, and of course, what companies and what type of companies. I also trade ETFs. I do find ETFs are a bit safer than stocks, or a lot safer than stocks. So I'll trade XLE. I did a video recently about IWM. I'll trade IWM. XLK. XLK is another one that shot through the roof that if we get a pullback, I'll probably buy more XLK and trade in it too. If you compare it to QQQ, XLK actually does a little bit better. Plus, it has the key companies that are probably going to benefit or will benefit from AI. They have like the Microsofts, the Amazons, the Googles, and so on, companies that are kind of in the right industry, they're typical technology companies, but again, in my mind, it's more pure technology companies versus QQQ. Now, the other important thing is patience and discipline. One thing that I'm trying to get better at is to close my positions, and you'll see in the spreadsheet that I share at the very end of this video, I'm closing a lot more of my positions. You will do better if you close a position, then open a new one. It's like a pause between rolling. Now, rolling is still a good thing, and I probably rolled 50% of my trades, but you can do better if there's a break, meaning you close and then open a new position. Mainly because when you're closing, it's typically for a put, the market's gone up so much, so you're closing when it's really cheap to close. And then when the market dives because of news, earnings, whatever it might be, then you're getting back in at a much better premium and also a lower price. So, and then also being patient. Sometimes something will go in the money either on the call side or the put side, and people might panic. They might get out of the trade too quickly. I find that especially on the call side, you can roll. And if you're rolling and you're not too deep in the money, the chance of assignment is pretty slim, or early assignment, that is. Puts, I've done analysis where if you're more than 10% in the money and you're fairly close to expiration, there's a good chance you will get early assigned. So it is important to potentially roll. The OCC, who kind of guides how early assignment occurs, they break it out to the different brokers and they base it on random or first in, first out. So just the nature of rolling at times will keep you from being assigned. Now, word of caution, you don't want to dig a deeper hole. So there's some instances where it makes sense to go ahead and let assignment occur. On the call side, it may be you've clipped your wings because you're so deep in the money for that call. You really want to free up that capital and put it somewhere else. I'm also questioning writing calls on momentum plays or growth companies. I'm working on a new checklist that'll go before the covered call checklist to identify when you shouldn't even write a covered call. Or if you write it, maybe you should do a call spread, what I'm calling a covered call spread. I did that for AMD and it worked out really well. I ended up selling the long call, buying the short call, and then selling a covered call, and I was able to roll it way up above 150 or right at 150. So just a few things. A lot of times, if you're new to trading options, people will panic. They'll see a negative number and they want to get out of it because they don't understand the way the brokers set it up. If you may still be well outside that strike price and not in the money, still outside the money, and it may still show as a loss. And that's just how it looks. You almost have to ignore that and look at the strike price and the current stock price and just be sure, you're pretty far away. Or look at the premium, the put and call premium. If it's relatively close to one another, meaning it's very profitable, then, you're typically going to be okay. So, it's important to be patient and not to panic. And that's also why I believe a membership is such a good thing for people. I have an area where people can put comments in early assignment, like they need help with early assignment. And I have a lot of people who will post to that, and I'll answer questions for them and other members. Like I said, I have other members who are probably more advanced than I am. They're doing strangles and straddles and things that I don't typically do. I'm very risk averse, and I don't change that much. If something works, I just try to make it better. I don't try to completely change it or try something completely radically different. So, and again, I do want to mention I do have these checklists. I have checklists for cash secured puts. I have a checklist for covered calls, and I have a new checklist that's kind of a filter for calls that you used before. And I'm going to add more. I'm also going to add a class, so my members or people who are members will get access to the class. Once it's available, I'm still working on it. And even this spreadsheet you're going to see next, I'm working on a tool that would replace it. One of the things I've been hired for in my consulting software business is to get rid of, like with AT&T, to get rid of all these spreadsheets that are all over the place and replace them with online tools where the data is backed up within a database. So I've got a member who's actually creating a product like that, and I might also create my own depending on how quickly he's done with what he's doing. And he did share something with me last week, which needed more work, and he's working on that now. So hopefully the next iteration, I'll be able to share it with some members and they can get a feel. Mainly because these spreadsheets, if you're like me and you've got 3, 4, 5, not contracts, but accounts, and then you're watching all your positions in all 4 or 5 different accounts, the spreadsheets can become fairly cumbersome. So having an online tool you can use would be better. I have looked at other online tools that are already out there, and they didn't quite fit what I needed. So, so that's why I'm doing that. Next, let's jump into the trades. I'll share with you what May looked like. I'll go into detail about each account. I have a Roth, I have an IRA, and then I have 2 Schwab accounts. and I'll talk about each one of those and how I did. One thing I've noticed, if you have smaller accounts, you can get much better returns on them. It's not unusual to be able to get 20, 30, 40% on a yearly basis. It's much harder when you have bigger accounts, when you're dealing with $1 million account or a $500,000 account or potentially $2 or $3 million account. It's in some ways harder to get those higher returns. Partially because you're already invested, you already have some stocks that are earning dividends and interest. So it's a little bit more difficult to get those big returns. It's a little bit easier. If you have a $10,000 account and you're earning 300 on a monthly basis, that's a 3% on a monthly basis. If you double that to 600, that's like 6% on a monthly basis. So the reason I mention that is I have another whole group of spreadsheets where I'm doing the wheel trades in different size accounts. I have a 10,000 account, a 25, and a 75,000, 50 to 75,000 account. And being able to watch those returns, I have separate trades for each of those. Just to see how well you can do in these smaller accounts was really surprising to me. I didn't quite realize that. I always figured bigger accounts were better. So, well, that's enough about that. Let's jump into the trades, and I'll go into more detail about what the overall month looked like. So stay tuned. Okay, now this is my May planning worksheet. I adjusted it for totals, and you can see at the top of the screen, it talks about my weekly goals. So my current weekly goals are 2,000 a week or 8,000 a month. And I encourage my members to set goals because it does take the pressure off. I know in May, my first 2 days in May were really good. I think I did over 2,000 those first 2 days, which took the pressure off. The rest of the week, with the beginning of May, the rest of the week, I was less worried. I still did trades and had a really good first week of May. I think I did almost 3,500 in the first week of May. So set some goals, identify how much you want to earn. I like to keep it really basic. So I set a weekly and then a monthly goal. I started back, I think my original goal was 500, then 1,000, then 2,000, then 4,000, then 6,000. And that I jumped to 8,000, then I went back to 7. Now I'm back up to 8,000. You can see here I did 9,348 for the whole month. And that's all the premium I brought in. I do have people that are at issue if I've just opened it and I haven't closed it. But I look at it on a month-to-month basis. So every month, whatever I close is part of that calculation for 9,448. And I've been able to do between 7,000 and 9,000 the last 3 or 4 months. So again, I might increase my goals before too long to 9,000 a month. And I'm not going to go into detail with a lot of these trades, but I'll just share them with you. So the first was Seagate. One thing about me, I work with a lot of different companies. Seagate shot through the roof. I tend to pick really good companies. And then I saw covered calls at one point, which is why I'm questioning selling these covered calls. STX, I believe, I still made a good profit on it, but it shot from I think 70 all the way up to almost 130, 140. So this one was a roll and pretty good return. Well, 4%. So this was a fairly good position. I closed the NVIDIA position, Intel, which is kind of been my problem child recently. It's still about a 50%, or it's down 50%. I own 400 shares, but I've been rolling it month to month, or not even month to month, like every 2 weeks, and bringing in some cash. So you could see with them, I brought in 396 for, what was that, Seagate, and that was for a covered call. Then NVIDIA, I did 184, which was like a 45% return, and it was a vertical put credit spread. So I believe I've closed all my NVIDIA vertical put credit spreads because it shot through the roof. Intel, I rolled from 5.2, and where did I go to? I went to 5.9 and brought in another $102. So at first I was rolling it weekly to try to bring in $100 to $200 on a weekly basis. Then Cisco, this was a covered call, another roll, 65 expiring 620, and I rolled it out to 919. Brought in $329, and this is like a 6% yearly return, which I do tell people, if you're going to sell covered calls, at least try to double your dividend. Next is FCX. This was assigned to me. I'm not showing any loss with it because actually I made a really good profit with it. And now I believe it's up as high as 44. So I'm currently writing covered calls on it, and it's a really good company. It's a miner. I think they mine all over. I think there's some mines in the U.S., there's some in South America. But with onshoring, I think they're going to do fairly well. Their numbers look really good next year. So I was assigned at 42, but my cost basis, I think, is like in the mid 30s. Another NVIDIA, I did a roll. This was another vertical put credit spread, 110, 100. This one I made 294, and it was like 129% return. And it's also closed currently. Like I said, with NVIDIA going up so high above, I believe today got as high as 155. Pretty much all my vertical put credit spreads are closed with it. This was FCX. This is the new covered call trade. I did at 41. And I did it at 41 because they did drop, and you could see that it was a 24 delta. And I brought in $172. You can see it here at 17% yearly return, which isn't bad for a covered call. IJH, I rolled it, and it's still, I believe, still out of the money. So I rolled it and brought in 233, and it was like 11% return. It's another ETF that I like. I think the S&P 600 or something along those lines. I think it's the balanced S&P 5, maybe the balanced S&P 500 XLK. Another situation. I really like XLK. It shot through the roof. I think it hit 250 today. 205 is what I sold it at. Yeah, here you can see it was already to 226 in May. So I rolled it up to 215, brought in 323 in premium, which is like a 4% yearly return. So it's probably going to get assigned away from me. If I looked today, it looked like I could roll it up to 230. But it's another position I want to add to it. I like trading it. If you like QQQ, you might also want to look at XLK. It might be a great opportunity to trade it. It's a lot easier on the pocketbook compared to QQQ. IWM, I talked about this in one of my previous videos, I think 2 weeks ago. Vertical put credit spread, 185, 175. This is very profitable. I haven't closed it yet, but I probably will. And it brought in pretty good premium, 300, no, it's total premium, 419. So something must be wrong here. I probably didn't, I didn't add the 419 to it. 83% return. So, and IWM is the one I like to trade where I don't really care to own IWM. I'm just trading it to make money. It's one of my only exceptions, one of the only cases where I do that. BP, this is a covered call. I've owned BP for a while. All the energy companies have struggled, I guess, because of oil prices coming down so much, but I made 153. I rolled it down a little bit from 35 to 32. And I've owned it for a while. Google, I closed one position and then rolled a new one. So I own a couple hundred shares, and I have one vertical put credit spread with them, which is this one here, 170, 155. And I rolled these and then some pretty good premium. Here's the different premium. And these were, I guess, some of the covered calls. This vertical put credit spread, it was near the money, so I rolled it just to get it out of the money. So I didn't make quite as much money with it. Then Polaris, this is, again, one of my kind of rough plays. Like Intel, Polaris got hammered over the last year. It dropped. They used to trade around 110, and it's dropped all the way down to around 40. So I'm doing almost monthly covered calls on it and bringing in pretty good premium and lowering my cost basis by doing that. So, and I've recently brought it up to 40. I rolled it just to the next month, kept it at 35, brought in $277, which was like a 15% return. And you can see my cost basis is quite a bit. So if my cost basis was closer to that 35, it'd be even higher. CLS, another one, recently, at least the last 9 months or so, or more than 9 months, a lot of the companies I picked have just shot through the roof. Again, the covered calls have become a little bit of a nuisance. So CLS also shot up into the 130s. I think it almost went up 50%. So this was a 95 covered call with 28 delta, and I rolled it just up slightly to 96, but brought in 198 in premium. So my cost basis is fairly low with it, but it does seem to come back to earth from time to time, and that's what I'm hoping will happen. Fiverr is one of my wheel trades, and this is one of two wheel trades in my brokerage, my Schwab brokerage. And I've just been rolling this. I don't own the shares yet, cash secured puts. It's worked out really well. If you're looking for something to roll, Fiverr, and I really like Fiverr. If you saw the video I did not too long ago, I use them. I use them for graphics. I use them for voiceovers. I've probably had 15 or 20 projects in the last 3 years with them. So rolled it, kept it at the same strike, and brought in another $151, which is like a 23% return for a cash secured put. CLS, again, I did another roll with CLS. I have CLS in a number of different accounts. But again, you could see I'm very deep in the money with it, but brought in $233, which was like an 8% return. Next is AMD. This was a vertical credit spread, a vertical call credit spread. So this is what I call my covered call credit spread, VCCS. So instead of just selling a covered call, I also bought the 130, which was relatively cheap. I think I only paid like 80 cents for it. And when I recently converted it from a vertical call credit spread to a covered call, and I was able to sell that 130 for like $10 and bring up my cost basis for my 200 shares, or not my cost basis, my covered call strike to over 150, or right at 150. I keep saying over 150, but I'm at 150. You can see I did a lot of trades at the beginning of the month, so 5-8. I'm already down halfway through my trades. XYZ, and they've been a little bit of a disappointment. If you don't know, this is Block. They changed their ticker symbol to XYZ, which is really annoying. They did go in the money. They dropped big time because they missed earnings. They're currently, I think, around 63, 64. So I still like them. We use them for my son's business. So I'm going to keep rolling them for this. I think I took a loss. So I took a $218 loss to lower it. And to be able to roll it out, I didn't quite know what I wanted to do. I didn't want to get a sign yet. Mara is another one I like to trade. At one point it was like $18 to $20. Now it got as high as 17. It's trading right around 14 and 15. It goes along with Bitcoin, but it's worked out pretty well. I was able to roll it. I do own some and now sell covered calls. So I rolled this, kept the same strikes, and I brought in $138, which is like a 38% return. Intel, another Intel covered call roll. So right at 1950, I've been between 1950 and 21, and brought in another $126. So another weekly roll. I ended up switching to monthly rolls for them. So ASO, that's Academy Sports, and it's coming back a little bit, but I rolled down from 55, I believe, to 52.50, unless I did that the next month. No, rolled it down to 52.50, and it expires next month. Brought in 174, which is like a 10% yearly return. And I like Academy Sports. I'm going to hold on to it. I think they're going to do okay long term. Another Mara, this is a covered call. at 15. This is in my brokerage, Schwab brokerage. No, that's my Roth. I have another, I think I have a couple hundred shares in my Schwab account too. It was 14.73, so barely in the money, but I rolled it up and out to 17 and brought in some pretty good premium. That's the one thing. It brings in fairly good premium, and they hold so much Bitcoin. They hold a significant, it's almost as much as their market cap. And you can't really use their earnings. Their earnings are kind of weird because they keep so much Bitcoin. If they could easily liquidate a small part of their Bitcoin and wipe away all their debt. And they mine for other people, and they keep a fair amount for themselves on a quarterly basis. So if you looked at just what they mine and what they keep based on Bitcoin values, it can be fairly significant. So now we're back to CLS. This is, I closed a vertical put credit spread. Hope to do more trades with them and was able to close it fairly inexpensively. RSP, and this is another S&P 500 type ETF. I also closed it for fairly cheap. And in SoFi, I did close a vertical put credit spread with them too. And then, and that's what I was talking about earlier. I'm trying to close a lot more of these so I can open them, once the market takes a dive. Now, we do have recency bias. It seems like the market's just going up and up. That can change in a moment's notice. I wouldn't be surprised. There's this big, beautiful bill that may be at risk of not passing. There's still a lot of tariff issues. And, Powell does not really want to cut rates. So if he doesn't cut rates, but I do believe Trump will replace him. I don't know if it's this fall or next year, but when he's replaced, whoever replaces him will cut rates without a doubt. GCT, this is a stock that has struggled, I guess, the last 6 months. It did really well. I believe it's right around 18. They were a Chinese company at one time. They they incorporated, I can't remember where. It might have been in California. So they're not a Chinese company, but a lot of people still look at them that way. And then also tariffs have had a major impact on them. So I'm just rolling them out. And at some point, I'm hoping to get out of that position. American Airlines, I'm using this for the wheel. I just roll a month. It's a 12-9 spread, and I roll it like once a month. This is in one of those accounts where I talk about, I can do this trade almost every month. I made 119 on it, which is almost, with the $3 spread, it's almost like 184% return. Some of these wheel trades have worked out really well. Now I do them with spreads, mainly because if the spreads are dirt cheap, and I think American Airlines was one of those, actually played with the idea of not just buying one long put in American Airlines, but buy two. They were so cheap, it was like $2-3 per contract. Why not buy 2 or 3? So something I'm looking at, I just need to remember to do it. Coca-Cola, I rolled a position to bring in some cash, and I typically do this every month. So I just rolled out the 618. I think that might be 918, not 618, but I brought in some pretty good premium, 577. Actually, this might have been a one that I rolled that I'd opened up recently. So I have a lot of Coca-Cola, so I will roll it up and down, and I've had half of it in the money for many years now, and none have been assigned to me since probably 2021. Now we're back at more covered call rolling, and at 15, and my cost basis is a lot less than 15 because I was able to roll it so many times. So I brought in 305. This is like a 52% return for covered calls. So, the premium for covered calls with Mara is really nice. Next is Schwab. This is the $13, which I believe and that's probably what I did here. I rolled it up to 15 and still brought in $191 in premium, which is like a 15% return. So it worked out well. AMD, this is a vertical put credit spread. Recently closed this, and At this point, I rolled it 104.94. So I rolled it up slightly and kept the same spread and brought in 221, a fairly good trade. And I might do more AMD trades like that too, because they've been very profitable. And same thing with NVIDIA. This is another one that I ended up closing later on, but it was a 116, 102. I widened it at one point to be able to roll it farther out. Now looking back, I wish I had taken assignment and I rolled it. I again thinned the spread and rolled it out to 718 and brought in a little less premium than I typically get with them, but it allowed me to close it later. Bluebird, another wheel trade. I just keep wheeling it month after month and it brings in pretty good premium. So in this case, it brought in 182, like a 15% yearly return. PayPal, this is a covered call. I do have 300 shares of PayPal. And I just rolled 8250, or no, this is a new position, 8250. These were on some shares that were assigned to me, I believe, back in April. So like a 10% return, brought in 168. EAT, this is a trade that, a new trade for me. I'm trying to think what company that is. Oh, that's Chili's. I like to invest in companies that I like to eat at. So Chili's is one of my favorite restaurants. So I did a 130, 120. I recently closed this, but I brought in really good premium, 412. This was probably one of my best trades in a long time. I'll probably open up another one with them once they shot up too. I think they're in the 170s now. Another NVIDIA roll. It was a covered call. This is in my Schwab account. I've owned these. My cost basis is crazy low. I have like a 4 or 5, I think I have a 500% return with my NVIDIA. Some of the shares I bought back in 2018. This time I made 301. XYZ, I rolled it again. This time I brought in some pretty good premium. So I rolled it out to 718 and I brought in 241. And then AMD, vertical put credit spread, this same 104.94, rolled it again and brought in 232. So a lot of times, if I find good enough premium, I'll go ahead and roll. But looking back at times, I probably shouldn't have. If I had let it where I could close it cheap and then open a new position when the market's way down, would have worked out better. Mara, another vertical put credit spread, 1911, rolled it, kept the same strikes, just went out the next month, brought in another $169, which was 38%. Then Zoom, I think I owned 500 shares of Zoom. I own 500 shares. So I rolled this covered call that I believe this is the 3, and I rolled it out to 718, increased it to 77.50, which I believe it's right at 77.50 currently. This was like a 9% return, brought into almost $266. And two more, Cart and Marvel, and these are some of my more recent trades. Cart is Instacart. I use them. I really like them. I'm going to be doing an Instacart order here shortly. It just saves me a lot of time if I don't have to drive to the grocery store. Plus, I always forget stuff. So it helps me. It helps you remember what you bought before. And it's just worth the time. If I can save that trip there and spending an hour in the grocery store, it's well worth it. So I did a 41.35, so a thinner spread. This was one of those instances where the $6 spread was a really good deal, so I went with it versus the $10 spread. At the time, it was 46, and I brought in 132, which is like a 91% return. I went with less risk. This was still close enough to, even though we were a month out from April, I was still very worried that I didn't want to take much risk. But I believe Cart I still have. Marvel I closed early, and which is the last one, Marvel. And I did a recent video on this, last video, a 14 Delta, so it took very little risk. It was 60.73 at the time. Now I believe might be in the mid to high 60s, maybe 70s. Made 146, which was an 80% return, but it's actually higher than that. I was able to close it, I think last week, so I closed it a good almost a month before. So that's more like 130% return. And then here you can see the total for all the different premium. So a very, very good month. Now, if we break it down, we can see in my Schwab brokerage, I did 2384, which on a monthly basis is like 0.54. And my Schwab accounts are nearly, I think they're 90% invested. So I don't have a lot of cash. I can't do a bunch of trades. Plus, I'm building up cash for my barn dough. I'm building a barnuminium and I need the cash to pay for. I'm trying to pay for as much as I can cash basis versus, building up too much debt. But that's like 0.54%. Then Fidelity IRA, it's like a 101, just slightly above 1%. And that's based on the value in that account, which is right around 410. And in my Schwab is like 440. And then this is another, for instance, of a small account. This is my Roth, which has got like 61,000 in it at that time. And it's like 4.65% return because I brought in 2838. You add all those together, it's 9348. And if you put all the accounts together, it's right at like a 1% return on a monthly basis. Now, I know there's people out there that are probably doing a lot better than that, but to me, this is what I want to do. Plus, my accounts appreciate. So I've been, at least in the last year, pretty much matching the S&P 500 and beating it a little bit. In this Fidelity Roth, I beat it by a good 3 to 4%. But I'm generating a ton of cash, which when you're building, this something like I am, a barnuminium or a house, it really makes it nice. There's a lot of stuff I can pay for in cash. And then dividends and interest, I'm bringing in right around just shy of $2,000 a month. Now, this is lower than it was last month because so many positions were assigned to me in April. I went to mostly cash to quite a bit funded or invested, not last month, but it was April. I got like XLK was assigned to me, more Google, and so on and so on. There were 9 different companies. I believe 9, it might have been 11. And then total cash and earnings between the premium and the dividends and interest, it was 11,293. So I've had $12,000-$13,000 months, but I was bringing in a lot more interest. I do like the fact that Fidelity pays interest on your cash you use for your puts. Really can add up pretty quickly. And then on a daily basis, and here's what the portfolio was worth at the time, on a daily basis, and that was going into May. By the end of May, it was considerably higher. It had dropped quite a bit because of the market drop in April. But the daily cash earnings is like just right around 565. So what are some of the notes or things I learned? 20 days of trading for the month of May. So I had 20 days that I actually traded. Did really well in my Fidelity Roth, need to trade in more accounts. So that's one thing I'm going to start trading in more accounts. I try to do 1 or 2 trades a day and then I'm done. If I meet my goals early on, I might not even do 1 or 2 trades. I probably average closer to 1.5 trades or 2 trades on a daily basis. But I could do more. But since I'm still working, I don't have that much time. I get on it usually around 9:45 or 10, and I'm usually back off around 11:30. Then I might get on in the afternoon around 2 if I have not made any trades or nothing's gone through. Like today, currently nothing's gone through. At least I have several open orders, but nothing's been filled yet. I haven't checked it in several hours. But at some point when I'm not working and I might have a little bit more time, I might do a few more trades. Seems like there's always a trade available to make, or the potential to make a trade. First 2 days did over 2K, great start, and helped the rest of the month. So if you start off with a bang, it just makes it easier to meet your goals for that month. 45 trades and fairly even between calls and puts. I had 21 call trades and 24 put trades. And that's one thing I do encourage, to have a balance of puts and calls, mainly because when the market dives, then your calls become very profitable and you can close them. And the reverse is true. When we get a huge green bounce like we have recently, then a lot of your puts become very profitable, and you can close them both vertical put credit spreads and cash secured puts. Three wheel strategies, adding a good amount to my bottom line. So I have the 10,000 strategy that's bringing in 300 to 400 on a monthly basis. The 25,000 strategy, I think it's bringing in 700 or 800. And then I have what I call my more advanced, where I do more cash secured puts. Might even do an iron condor in there. That's bringing in a bit more. Now, it did have a lot of the positions assigned seem to be in that one account, of course, because it's such a bigger account. FCX only position assigned, and it is currently profitable. It's significantly profitable too. So, and if you've not traded them, they're a good company to have in your portfolio. I think they're going to do really well next year. And then interest and dividends down to prior months assignments. So didn't have as much cash. I probably had close to 100,000 less in cash by the end of April, early May. So that's what I wanted to share with you guys. Let me know what you think. Like I mentioned earlier in the video, I'm going to replace this spreadsheet with some kind of an online tool, either maybe the one that one of my members is working on, or potentially something I create, or maybe something I find in the market. So far, I've looked at 3 or 4 tools in the market, and I haven't found anything that really fits my needs. So let me know what you think. Are you using a tool where I wouldn't need these spreadsheets? If you do, or if you are, please share it in the comments. Also, do you track your trades like this? I'm curious to how other people out there track their trades. So thank you for taking the time to watch the video, and I hope you have a wonderful rest of your day.